for the second time this year, I had an in-person monthly gathering, and it was this past Tuesday in person, and it was great. And one of the questions that came up a lot, and either was directly asked or indirectly commented on, was about manipulation. And in fact, at one point, I feel a little bad about this. One of the people that was in the room asked about gold and the direction of it, because I changed my stance on gold slightly. And at the end of it, she said, "So you're saying it's manipulated?" And I actually kind of snapped back at her. I said, everything's manipulated. Everything's manipulated, and it always has been. And gold's the most manipulated." And I felt a little bad about snapping back at her because I was angry. I had just spent the last hour saying that most things in the investment world have been manipulated, at least since 2008, and gold is the most manipulated investment asset class on this planet, and has probably been getting manipulated for at least 2,000 years. So after telling everyone for an hour at least that everything has been manipulated since 2008, and gold for 2013 years, I snapped at her, and it bothered me that I did that. Not so much for getting angry, but that people want to know why. People want to know the why something is happening, because that can make them feel better. And I'm not talking about this one person specifically. I'm talking about everyone, including myself. When we know the why, it can help us understand things, even if it doesn't help us grow our money. And I want to talk about what really does grow our money. And I won't entirely go away from us wanting to know the why. Why a plane crashes. We have to know the reason. Was it the engine? Was it the pilot? Was it the plane manufacturer? Was it the weather? As humans, we want to know why. I think because it maybe makes us feel better, or we can compartmentalize it. So, but I think the reason why you're listening to these podcasts, some of you are listening to them, is so you can get out from under the obligation of others, so you can get to this place called more than enough. For me, the place called more than enough is this place where you can be the difference maker for your community, for your family, for your organizations, right? Every one of those groups needs difference makers. And I've noticed when people have their overhead, their expenses, their lifestyle covered, and they know it's covered for the rest of their life, then they are much, much, much more likely to give back to others and be the difference makers. So it's not what stock is going up. It's not even necessarily what sector is going up, but really the question is, do you know what direction your net worth is moving? Because I have investments in gold, and those have gone against me this year. And I've taken appropriate actions to manage that. But the question that my wife and I ask each other is which direction our net worth is going, and we measure it once a month. Which leads to the second reason to have people, or the second ingredient that allows people to get each year more and more choices and out from under the obligations of fewer and fewer people. And that second question is to ask yourself, are you on the same page with your spouse? Now, most of the people that come to me are men who say, how do I get my wife on the page with me? But that's not actually what you want. You and your spouse, or you and your wife, or you and your husband, you guys want to be on the same page. Because in my 15 years, actually 15 plus years of working with individuals and couples, what I've noticed is people who know which direction their net worth is moving become richer and richer. And I know the word rich or richer is a triggering word, so they get more and more choices. Couples who are on the same page with their money, they grow their wealth better, they grow their choices better. And the third thing is knowing whether your money is following a conventional investment approach. And there's periods of time where the conventional investment approach works, absolutely. And we're in one of those right now, from literally the bottom of March 2009 till today. You didn't have to do anything. You just put your money in the market, buy a little bit each month, and you would have done great. And there's periods where that works, and then there's periods where that can get all wiped out. So a conventional approach isn't really adapting, isn't really shifting, isn't really changing to necessarily manipulation. Though right now there's lots of manipulation to make sure the stock market goes up, but no one's complaining about that manipulation. So back to kind of knowing why. We want to know why, but what's most important is what direction it's actually going, it being the asset class you're in. That's what's most important. And so I just cannot resist to bring this picture in, which I absolutely love this picture. I bring it out about 4 times a year. And my caption on this is, "They thought we would taper." I just love it. So I think what's most important is we just look at which direction the 4 asset classes in this world are moving. And I want to remind you that there are only 4 places on this planet you can put your money. There's not a 5th, there's not a 6th. Every place you can possibly put your money on this planet is on the screen right now. And let's start with companies. Most people would say companies and go, well, that's private companies. But really what I'm talking about is publicly traded companies. And publicly traded companies are trending up. And with the $85+ billion of money printing each month, which seems to be almost a dead ringer to continue with Yellen being the next person, that's going to go on for probably much longer than people could ever imagine. So look, the stock market's going up right now, and we've got to go with it. And my market probability strategy has had us in on the right side since the very beginning. It had us out in 2000 and 2008. And then we look to currencies. Yes, even cash under your mattress and cash in your bank account, that's a currency. It's either going up or down against other printable currencies. But generally speaking, all RC, every single currency, actually, yeah, all printable currencies are falling. And they have to, because the world is so over indebted that all countries have to print money. If the US prints money, the rest of the world has to print money. And the whole world is printing money. Europe's printing money, the UK is printing money, the US is printing money, Japan is printing money, China's printing money, which means all the other smaller countries are printing money. And more printing of fiat currency always drives the value and what that currency is able to buy down over time. The third one in no particular order is debt or bonds. And those are falling. You've heard me speak before that I think we hit the bottom in interest rates, the low in interest rates back in June, July of last year. So that was about 14 months ago. When rates go up, that means the price of bonds go down. This is going to be a real problem over the next 30 years for anyone who's depending on the yield from those bonds and wanting to buy more bonds, because the cost of living is not going to keep up, because the price of bonds are going to be falling over the next 30 years. Not every week or every month or every quarter, and maybe not even every year. Just like from 1980 till last year, they didn't go up every year. But generally speaking, that's one of the the direction of debt, generally speaking, is down. Though there are areas, and I talk about one of the great investments in my margin of safety strategy, where you can find, I don't want to say an almost guaranteed, because that would be, you can't call anything guaranteed in the investment world, but one of the choices in margin and safety strategy has been absolutely steady in that 8, 9, 10% yield since that investment came out. And then the fourth section is physical assets, which is probably the most complicated because housing is in there, rare wine is in there, master oil paintings is in there, commodities are in there. So there's a lot in the physical asset class. And so when I have the red arrow down, that's speaking more to all the commodities in the world. And yes, housing is going up, but the commodities are going down. So maybe that actually should be sideways, because half is going down and half is going up. But that's where we are right now. You go with what's happening. Housing is still going up right now under the Bernanke, soon-to-be Yellen money printing press. I'm sure private companies are, but publicly traded companies are going up. And so you want to put where your money is best treated. And this has been difficult for some people over the last 2 years, with gold being hit pretty hard. And gold is in a correction right now. And it's going to be in a correction until it stops being in one. And I know that might sound unfulfilling, But what we do know about anything that is expensive to dig out of the ground is the lower the price goes, the higher the probability we're going to get to the end. And I'm not sure where that is specifically. But if gold breaks below its June 28th low, then the next place it's probably going to want to go is about $1,000. And its June 28th low is about $1,200. My final thought really is if you'd like to get some of my time for free, you can find out if you qualify for that. Over the last 15 plus years, what I've probably done best than anything else on this planet is to help couples and help individuals get to that place called more than enough. And I do it through individual coaching. And the people that I'm able to help the most are people who are already running, people who are already making $200,000 or $300,000 or $400,000 a year. That means they have an active income. They're not retired. They're actively working, but they feel stuck. I would even call them the working rich. Given that I live in Silicon Valley, the working rich are people that probably earn between $300,000 and $500,000, but their net worth is not growing. They are not getting more choices, more security, more freedom, and they are not getting out from under the obligations of others. And they're probably not on the same page with their spouse, and they probably don't know which direction their net worth is going, let alone they're even tracking it. So if that's you and you really are interested and you're serious about accelerating your net worth and getting more choices and getting more freedom, then the next step is pretty simple. The next step is just to email Patty. Easiest thing you could do is email Patty, Patty at Fearless Wealth, and just say, do I qualify? I want to see if I can speak to RC for free. Because if you do qualify, I am looking to take on some new clients. And what's most important is that it's a great fit for both of us. So I hope you guys have a great weekend. The circus is in town for us in Redwood City. So I'm going to take Everly, my 2-year-old, and Bowen, my 6-year-old, to the circus. And I love being around that energy. And it's such a gift. And I feel very lucky that I'm able to be consciously aware of the gift of having that young energy, that kid energy around me, so I don't necessarily look back when I'm older and go, I wish I would have appreciated it. I'm so appreciative of having those little kids in my life. So you guys take care, squeeze your little kids, hug them, hug your wife, hug your husband or your grandkids, and you guys just have a great weekend, and I'll speak to you next week. All right, take care.